Part 1. The mistake almost every trader makes. Imagine this. You spend hours analyzing the charts. You wait patiently for what looks like the perfect setup. Everything matches your strategy. The trend is clear. Your entry is precise. Your stop loss is in the right place. You click buy. For a few minutes, everything goes exactly as planned. You're in profit. You begin imagining how much money you'll make. Maybe this is the trade that changes everything. Then, the market pulls back. Your profit starts shrinking. You tell yourself, it's only a small retracement. A few minutes later, the market drops even further. Instead of accepting the loss, you move your stop loss farther away. You don't want to be wrong. The market continues falling. Now your small loss has become a big loss. Your heart starts racing. Your palms sweat. You stare at the screen, hoping the market will come back. It doesn't. Eventually, your account takes a devastating hit. Sound familiar? If you've ever experienced something like this, you're not alone. In fact, almost every trader has. But here's what's interesting. The biggest mistake wasn't entering the trade. It wasn't choosing the wrong currency pair. It wasn't even the losing trade itself. The real mistake happened long before you clicked the buy button. And that single mistake destroys more trading accounts than almost anything else. Today, we're going to uncover what it is. Because once you understand this mistake, you'll never look at trading the same way again. Most beginners believe their biggest problem is strategy. They spend months searching for the perfect indicator. They download dozens of trading systems. They buy expensive courses. They copy signals from social media. Every time they lose money, they assume the strategy is broken. So they switch again, and again, and again. But here's the truth. Strategy is rarely the biggest problem. Think about it. If you gave the exact same trading strategy to 100 traders, would all 100 make money? Of course not. Some would become consistently profitable. Some would break even. Many would lose everything. Why? Because a strategy doesn't make decisions. A trader does. The trader decides whether to follow the rules. The trader decides whether to move the stop loss. The trader decides whether to overtrade. The trader decides whether to revenge trade after a loss. The strategy stays the same. The human behavior changes. That's where the real battle begins. There is one mistake that quietly destroys accounts. It doesn't happen once. It happens over and over again. Sometimes you don't even realize you're making it. This mistake is trading without accepting the risk before entering the trade. Read that again. Not accepting the risk. Most traders think they accept risk because they place a stop loss. But placing a stop loss isn't the same as emotionally accepting that the money could be lost. When the trade starts moving against them, fear takes over. Hope replaces logic. Emotion replaces discipline, and everything falls apart. The market didn't destroy the account. The inability to accept risk did. Think of a professional poker player. Before placing a bet, they already know they might lose that hand. They're comfortable with uncertainty. Now think about many beginner traders. They don't enter trades expecting probabilities. They enter expecting certainty. They believe every setup should win. So when the market proves them wrong, their emotions explode. They move stop losses. They add more positions. They refuse to close losing trades. One mistake becomes 3 mistakes. 3 mistakes become 10. Eventually, the account disappears, not because the strategy failed, but because the trader couldn't accept uncertainty. Here's something that might surprise you. The market doesn't reward people who are right. It rewards people who manage risk. You can be right only half the time and still become consistently profitable. You can also be right most of the time and still lose money if your losses are much larger than your wins. Winning isn't about predicting every move. It's about protecting your capital while letting your edge play out over hundreds of trades. That's a completely different way of thinking, and it's the mindset shared by many long-term successful traders. So throughout this series, we're going to uncover exactly why this single mistake destroys so many accounts, how your brain tricks you into making it, and most importantly, how you can train yourself to avoid it completely. Because once you master your mind, you're no longer just placing trades. You're thinking like a professional. Part 2. Why traders can't accept risk. Now that we've identified the biggest mistake in trading, not accepting the risk before entering a trade, the next question is, why is it so difficult? Why do intelligent people, who understand the rules of trading, continue making the same mistakes over and over again? The answer isn't found in the charts. It isn't hidden inside an indicator. And it certainly isn't a secret strategy. The answer is found in the human brain. To understand why traders struggle, we first need to understand how our minds are wired. Thousands of years ago, humans weren't trading financial markets. They were trying to survive. Our ancestors had to constantly watch for danger. A strange sound in the bushes, a predator nearby, a lack of food. Their brains evolved to protect them from loss. That survival instinct is still inside us today. The problem is, the Forex market isn't a jungle. But your brain often reacts as if it is. When a trade starts losing money, your brain doesn't calmly think, this is simply one trade out of many. Instead, it interprets the loss as a threat. Your heart beats faster. Stress hormones increase. Your emotions take control. Suddenly, making logical decisions becomes much harder. The need to be right. One of the biggest psychological traps is the desire to always be right. Think back to school. You were rewarded for correct answers. You received high grades when you were right. At work, making mistakes often had consequences. Over time, many of us learned to associate being wrong with failure. That mindset becomes dangerous in trading. Because in trading, being wrong is normal. Even the best traders lose. Imagine a trader whose strategy wins only 45% of the time. Most beginners would reject that strategy immediately. But what if every winning trade earned 3 times more than every losing trade? Over hundreds of trades, that trader could still be highly profitable. The goal isn't to avoid being wrong. The goal is to manage being wrong well. Professional traders understand this. Beginners often don't. Hope is not a strategy. Let's imagine you're in a losing trade. Your stop loss is only a few pips away. Instead of accepting the loss, you think, maybe it will come back. Then you move the stop loss farther away. Now you're no longer following your plan. You're following hope. Hope feels comforting, but in trading, hope can become one of the most expensive emotions. The market doesn't reverse simply because you want it to. Every time you replace your plan with hope, you're giving up control. Successful traders don't hope, they prepare. Revenge trading. Now imagine your stop loss gets hit. You're frustrated. You feel like the market stole your money. Instead of taking a break, you immediately open another trade. Not because your strategy tells you to, but because you want your money back. This is called revenge trading. It rarely ends well. When emotions are in control, discipline disappears. Traders begin forcing entries, ignoring setups, increasing position sizes, taking unnecessary risks. One losing trade becomes 5 become 10. By the end of the day, the account has suffered far more damage than the original loss ever caused. The market didn't force those trades, emotion did. The illusion of control. Another trap is believing you can control the market. You can't. No trader can. You can't control news. You can't control central banks. You can't control large institutional orders. You can't control unexpected events. What you can control is your entry, your exit, your risk, your discipline, your emotions. The sooner you stop trying to control the market and start controlling yourself, the faster you'll improve. Every trade is independent. Here's a powerful lesson. Your previous trade has absolutely no effect on your next trade. If you just won 5 trades in a row, the next trade doesn't owe you another win. If you just lost 5 trades in a row, the next trade doesn't owe you a win either. Every trade is a new probability. Professional traders understand this. Beginners often carry emotions from one trade into the next. That's how emotional trading begins. The professional mindset. Ask yourself this question before every trade. If this trade loses exactly as planned, will I still be emotionally comfortable? If the answer is no, you're risking too much. Professional traders don't fear losses because they've already accepted them before entering the trade. Once they click buy or sell, their job is simply to follow the plan. Nothing more, nothing less. The story you'll never forget. Imagine 2 traders. Both have a $1,000 account. Both use the exact same strategy. Trader A risks 1% per trade. Trader B risks 10%. They both lose 5 trades in a row. Trader A is disappointed, but calm. Most of the account is still intact. Trader B is in panic. Nearly half the account is gone. Now fear controls every decision. Trader B starts chasing losses, taking random trades, ignoring the plan. Within days, the account is wiped out. The strategy wasn't different. The mindset was. Risk management gave one trader another chance. Emotion took the other trader out of the game. The market isn't testing your intelligence. It's testing your discipline. Every day, it asks the same question. Can you follow your plan, even when your emotions tell you not to? Most traders fail that test. But those who learn to master themselves gain something far more valuable than a winning strategy. They gain consistency, and consistency is what separates professionals from gamblers. Part 3. The 4 emotions that secretly destroy traders. Have you ever promised yourself, this time I'll follow my trading plan? Then, just a few hours later, you broke every single rule. You moved your stop loss. You entered a trade too early. You risked more than usual. You chased the market, and afterward, you sat there wondering, why did I do that? The answer is simple. You weren't making decisions anymore. Your emotions were. Every trader believes they're logical. Until real money is on the line, then everything changes. A demo account is easy. Losing virtual money doesn't hurt. But when it's your own money, every pip feels personal. Every candle feels emotional. And that's where the real battle begins. Emotion number 1, fear. Fear is usually the first emotion every trader experiences. Fear before entering, fear after entering. Fear of losing money, fear of missing out, fear of making another mistake. Let's say you've just had 3 losing trades. Now a perfect setup appears. Your strategy says, take the trade, but fear says, what if this one loses too? So you skip it. A few hours later, that trade becomes the biggest winner of the week. Now you feel frustrated, not because your strategy failed, but because fear stopped you from following it. Fear doesn't always make traders lose money. Sometimes, fear prevents traders from making money. Professional traders don't wait until fear disappears. They act according to their plan, not according to their emotions. Emotion number 2, greed. Now let's talk about greed. Greed is much more dangerous because it often disguises itself as confidence. Imagine your plan says to take profit at 2 to 1. Price reaches your target. But instead of closing, you think, maybe it can go even higher. You ignore your plan. A few minutes later, the market reverses. Your winning trade becomes a losing trade. Greed has an interesting effect, no matter how much profit you have. It always whispers, just a little more. Successful traders understand something beginners don't. Taking planned profits isn't weakness, it's discipline. Emotion number 3, ego. This emotion quietly destroys thousands of accounts. Ego. Nobody enjoys being wrong. Especially after spending hours analyzing charts, so when the market moves against a trader, their ego refuses to accept reality. Instead of closing the trade, they add another position, then another. They tell themselves, the market has to come back, but markets don't care about opinions. They don't care how confident you are. Price doesn't know your analysis. It only reflects buyers and sellers. Professional traders aren't attached to being right. They're attached to protecting capital. There's a huge difference. Emotion number 4, impatience. This one is responsible for more bad trades than almost anything else. Impatience. Imagine sitting in front of the charts for 3 hours. Nothing happens. Your strategy gives no signal. But your mind starts talking. There has to be something. I've been waiting too long. I don't want to waste today. So you create a trade that doesn't exist. You convince yourself the setup is good enough. You enter. 30 minutes later, you realize it wasn't your setup at all. You forced it. The market didn't create the loss. Your impatience did. Professional traders understand something powerful. Sometimes, the highest paying decision is doing absolutely nothing. The emotional snowball. One emotional mistake rarely stays alone. Let's watch what happens. A trader enters too early. The trade loses. Now fear appears. Instead of accepting the loss, hope takes over. The stop loss gets moved. Loss becomes larger. Now frustration arrives. The trader immediately opens another position. Revenge trading begins. That trade loses too. Now greed appears. The trader doubles the lot size, trying to recover everything. Hours later, the account is destroyed. Notice something: the first mistake wasn't technical. It was emotional. Everything else happened because emotions were left unchecked. The hidden cost of emotional trading. Most traders only measure money. Professionals measure something else: mental energy. Every emotional trade drains confidence. It increases stress. It creates self-doubt. Eventually traders stop trusting themselves. Now even good setups become difficult to execute. This is why discipline is so valuable. It protects both your account and your confidence. How professionals handle emotion. Do professionals feel fear? Yes. Do they experience greed? Absolutely. Do they sometimes doubt themselves? Of course. The difference is, they don't allow emotions to make decisions. Instead, they rely on systems, rules, checklists, risk management, preparation. Their emotions exist, but their rules stay in control. That's the habit every successful trader builds. How professionals handle emotion. Do professionals feel fear? Yes. Do they experience greed? Absolutely. Do they sometimes doubt themselves? Of course. The difference is, they don't allow emotions to make decisions. Instead, they rely on systems, rules, checklists, risk management, preparation. Their emotions exist, but their rules stay in control. That's the habit every successful trader builds. One question that changes everything. Before entering your next trade, ask yourself one simple question. Am I taking this trade because my strategy tells me to, or because my emotions want me to? That single question can prevent hundreds of unnecessary losses over your trading career. It forces you to pause, to think, to separate logic from emotion. Sometimes, 5 seconds of self-awareness can save months of recovery. Every great trader eventually discovers the same truth. The market isn't your biggest opponent. Your own mind is. Charts don't create fear. You do. Candles don't create greed. You do. Price doesn't force revenge trading. Your emotions do. The moment you stop blaming the market and start training your mind, everything begins to change. Because profitable trading starts long before you click buy or sell. It starts with mastering yourself. Part 4. The Silent Account Killers. Habits that destroy traders. At this point, you understand something that many traders never do. The market isn't your biggest enemy. Your emotions are. But emotions don't destroy accounts by themselves. They create habits, and those habits slowly destroy your trading account, one decision at a time. Most traders don't blow an account in one trade. They destroy it through dozens of small emotional decisions. Today, we're going to expose those habits, because once you can recognize them, you can stop them before they cost you thousands of dollars. Habit number 1. Overtrading. Imagine waking up every morning believing you have to make money today. You sit in front of your charts. The market is quiet. Nothing meets your strategy. But instead of waiting, you begin searching for trades. You zoom into smaller time frames. You convince yourself you see a setup. You enter. It loses. Now you're frustrated. So you take another trade, then another. By the end of the day you've placed 10 trades. When your strategy only gave 2 valid opportunities, this is called overtrading. Overtrading usually comes from one belief: the more I trade, the more money I'll make. But that's rarely true. Professional traders don't get paid for placing trades. They get paid for waiting patiently until the right opportunity appears. Sometimes the best trading day is the day you never placed a single trade. Habit number 2. Moving your stop loss. This habit destroys more accounts than almost anything else. Let's imagine your stop loss is exactly where your trading plan says it should be. Price gets close. Instead of accepting the loss, you move it farther away. You tell yourself, I'll give the trade a little more room. But what you're really saying is, I don't want to accept being wrong. Minutes later, price continues falling. Now the loss is twice as large. You move it again. Eventually, one small planned loss becomes one devastating loss. Professional traders understand something beginners don't. A stop loss is not a suggestion, it's a promise. The moment you move it because of fear, you've broken your own trading plan. And once you break one rule, breaking the next one becomes much easier. Habit number 3. Increasing lot size after losing. Let's say you've just lost 3 trades. You're frustrated. You look at your account balance. Instead of following your normal risk, you double your position size. You think, if this trade wins, I'll recover everything. This feels logical. But it's actually emotional. This is gambling. Because now your decisions are based on desperation, not probability. Professional traders understand that losing streaks are normal. They don't increase risk because of emotions. If anything, some reduce their position size until they regain confidence. The goal isn't to recover quickly. The goal is to survive long enough for your edge to work. Habit number 4, chasing the market. Every trader has experienced this. Price suddenly makes a huge move. You weren't in the trade. You panic. You think, I'm missing the opportunity, without waiting for your setup. You jump in. Seconds later, the market reverses. You bought the top, or sold the bottom. This is called chasing the market. Markets create opportunities every week. Missing one setup isn't the end of your trading career. Professional traders understand something powerful. There will always be another trade. There may not always be another account if you continue chasing price. Habit number 5, trading without a plan. Imagine trying to drive across a country without a map. You don't know where you're going. You simply hope you'll arrive. That's exactly what trading without a plan looks like. Many traders open the charts and decide everything at the last second. Where to enter, where to exit, how much to risk. Everything changes depending on emotions. Professional traders decide these things before entering the trade, not during it. A written trading plan removes emotion from decision-making. When emotions become loud, the plan stays the same. The domino effect. Here's what usually happens. A trader overtrades. That creates losses. Losses create frustration. Frustration creates revenge trading. Revenge trading creates larger losses. Larger losses create panic. Panic creates bigger lot sizes. Then the account disappears. Notice something. It wasn't one mistake. It was one emotional decision, leading to another, and another. Until everything collapsed. That's why discipline matters. It stops the first domino from falling. The professional difference. Let's compare two traders. Both use the exact same strategy. Trader A loses 3 trades. He accepts the losses, reviews his journal, waits for the next valid setup. Trader B loses 3 trades. He doubles his lot size, moves his stop loss, takes random entries. By the end of the week, Trader A is still following the process. Trader B is opening another trading account. The market didn't choose the winner, their habits did. One rule that can save your account. If you remember only one lesson from today's video, remember this. Never make your next decision based on your previous trade. Every trade deserves its own analysis, its own risk, its own probability. The market doesn't care what happened 5 minutes ago. Neither should your trading plan. Treat every setup as a completely new opportunity. That simple habit can change your entire trading career. The biggest trading accounts aren't destroyed overnight. They are destroyed one emotional decision at a time. One move stop loss, one revenge trade, one oversized position, one impatient entry. Then another, and another. But here's the good news. The same process works in reverse. One disciplined trade, one respected stop loss, one patient decision. One day of following your plan. Repeat that long enough, and you begin building something most traders never achieve: consistency. Because profitable traders aren't people who never make mistakes. They're people who refuse to let one mistake become 10. Part 5, The Science of Discipline. How profitable traders stay consistent. If I asked you what separates a consistently profitable trader from someone who blows account after account, what would you say? A better strategy, more experience, a larger trading account? Most people would answer one of those. But they're all incomplete. The real answer is discipline. Not the kind of discipline people talk about in motivational videos. The kind of discipline that shows up when you're tempted to break your own rules. Because here's the truth. Trading isn't difficult because it's complicated. Trading is difficult because it requires you to do things that feel unnatural. It asks you to accept losses. It asks you to wait patiently. It asks you to stop trading after reaching your daily loss limit. It asks you to take profits according to your plan instead of your emotions. In other words, trading constantly challenges your instincts. Why discipline is so hard? Let's imagine you're watching the USD. Nothing has happened for 2 hours. You're bored. Then suddenly, price starts moving quickly. Your heart rate increases. You feel like you have to do something. This feeling is normal. Your brain loves action. It loves excitement. It loves immediate rewards. But the market rewards patience. That's why discipline feels uncomfortable. It's choosing what is right, instead of what feels good. Professional traders understand this. They don't chase excitement. They chase consistency. Motivation versus discipline. Many beginners rely on motivation. They watch trading videos, read inspiring quotes, feel excited for a few days, then reality hits. A losing streak begins, suddenly. The motivation disappears. Discipline is different. Discipline doesn't depend on mood. It doesn't care if you feel confident or discouraged. It simply says, follow the plan. That's why professionals build routines instead of depending on emotions. The checklist habit. One habit that many successful traders use is a pre-trade checklist. Before every trade, ask yourself, is this setup part of my strategy? Is the trend clear? Have I identified my stop loss? Have I calculated my risk? Does the reward justify the risk? Am I calm and focused? Am I entering because of my plan or because of emotion? If even one answer is no, don't take the trade. This simple checklist can save you from countless emotional decisions. Professionals don't trust memory, they trust systems. Why journaling changes everything. Imagine playing football without ever watching your previous matches. How would you know what to improve? Trading is the same. Every trade teaches you something, but only if you record it. A trading journal isn't just about numbers. It's about behavior. Write down why you entered, whether you followed your rules, what emotions you felt, what you learned. After 50 or 100 trades, you'll begin noticing patterns. Maybe you lose money every time you trade late at night. Maybe you perform best during one specific trading session. Maybe impatience causes most of your mistakes. Without a journal, those lessons remain invisible. The power of small improvements. Many traders want dramatic changes overnight. But improvement doesn't happen that way. Imagine improving just one habit each week. Week 1, you stop moving your stop loss. Week 2, you stop revenge trading. Week 3, you become more patient. Week 4, you follow your checklist every time. Individually, these changes seem small. Together, they completely transform your trading. Consistency isn't built through one big breakthrough. It's built through hundreds of small improvements. Treat trading like a business. One of the biggest mindset shifts you can make is this. Stop treating trading like a casino. Start treating it like a business. Businesses have plans, budgets, rules, records, reviews. Professional traders do the same. They don't wake up asking, how much money can I make today? They ask, can I execute my plan with discipline today? That's a completely different mindset. The best traders protect capital first. Imagine you own a small business. Would you spend all your money on one risky idea? Probably not. You'd protect your capital. Trading is no different. Your account is your business. Every dollar in your account is inventory. Protect it, because opportunities never stop coming. But if your capital is gone, you can't take advantage of them. Professional traders know that surviving difficult periods is part of long-term success. The goal is boring consistency. Here's something surprising. Most consistently profitable traders describe trading as boring. Why? Because they don't chase excitement. They follow routines. They wait. They execute. They review. Then they repeat the process. The more exciting your trading feels, the more likely emotions are controlling your decisions. Real consistency often feels ordinary. And that's exactly how it should feel. Every morning, before you open your charts, remember this. The market isn't asking whether you're smart. It isn't asking whether you found the perfect indicator. It's asking something much simpler. Can you trust yourself to follow your own rules? If the answer becomes yes, day after day, week after week, month after month, then you're no longer thinking like a beginner. You're thinking like a professional. And that's when consistent profitability becomes a realistic goal, not because you control the market, but because you've learned to control yourself. Part 6. Build a trading system that protects you from yourself. At this point, You've learned something that many traders never fully understand. The biggest threat to your account isn't the market. It's not the broker. It's not the news. It's you. More specifically, it's the emotional decisions you make under pressure. So the question becomes, how do you stop yourself from making those decisions? The answer is simple. You build a system. Not just a trading strategy, a complete trading system. Because strategies tell you when to trade. A trading system tells you how to behave before, during, and after every trade. That's what professionals have, and today, you're going to build one. Rule number 1, define your risk before you enter, before clicking buy or sell. You should already know exactly 3 things. How much you're willing to lose, where your stop loss will be, and where your take profit will be. If you don't know these 3 things, you're not ready to enter. Imagine building a house without knowing where the foundation will go. That's exactly what trading without defined risk looks like. Professionals don't guess after entering. They decide before entering. Rule number 2. Risk the same amount every trade. One mistake beginners constantly make is changing their risk based on emotion. After a winning streak, they increase their lot size because they feel invincible. After a losing streak, they increase it again because they want revenge. Notice something. Both decisions come from emotion. Professionals choose a fixed percentage of their account to risk on each trade. Then they stick to it. Win or lose, nothing changes. Because consistency in risk creates consistency in results. Rule number 3. Set a daily loss limit. Imagine losing 4 trades in a row. You're frustrated. You tell yourself, one more trade. Then another, before you know it. A bad day becomes a terrible week. Professional traders avoid this with one simple rule. A daily loss limit. For example, if they lose a predetermined amount or number of trades, they stop trading, not because they're weak. Because they understand something important. When emotions become stronger than logic, the probability of making mistakes increases dramatically. Sometimes the most profitable decision is closing the laptop. Rule number 4. One strategy only. This is where many traders get trapped. Monday, they're using price action. Tuesday, they're trading indicators. Wednesday, they're copying signals. Thursday, they're watching another YouTube strategy. Friday, they're completely confused. This is called strategy hopping. Every strategy experiences losing trades. If you abandon a strategy after every loss, you'll never discover whether it actually works. Professionals don't master 20 strategies, they master 1. Depth beats variety. Rule number 5. Create a pre-trading routine. Before the market opens, take 10 minutes. Review the economic calendar. Mark important support and resistance levels. Check the higher time frames. Review yesterday's trades. Read your trading rules. Take a deep breath. Now you're prepared. This routine trains your brain to switch from emotional thinking to professional thinking. The market hasn't changed. Rule number 6. Create a post-trading routine. Most traders stop thinking after they close a trade. Professionals begin learning. Ask yourself, did I follow my plan? Did I manage risk correctly? Did emotions influence my decisions? What could I improve tomorrow? Every answer makes you slightly better. Remember, experience alone doesn't create skill. Reviewed experience creates skill. Why systems beat willpower. Many traders believe they'll simply try harder, but willpower fades. Especially after stress, systems don't. Imagine brushing your teeth. You probably don't rely on motivation. It's simply part of your routine. That's how trading should become. Following your rules should feel automatic, not emotional. The stronger your system becomes, the less you depend on feelings. The compound effect. Imagine improving only 1% every week. It doesn't sound exciting, but after a year, those improvements become massive. Better entries, better patience, better discipline, better emotional control. Profitable traders aren't built overnight. They're built one habit at a time. One disciplined day becomes one disciplined week. One disciplined week becomes one disciplined month. Eventually, discipline becomes your identity. The professional question. Every morning, professional traders ask one question, not, how much money can I make today? Instead they ask, can I execute my system perfectly today? Because they understand something beginners don't. Money is the byproduct. Execution is the goal. Focus on execution. And profits often take care of themselves over time. Focus only on profits, and emotions usually take over. A trading system won't eliminate losses. It won't guarantee success. But it will protect you from making the emotional decisions that destroy accounts. And that's more valuable than any indicator you'll ever download. Because at the end of the day, the best traders don't have magical strategies, they have extraordinary discipline. And discipline isn't something you're born with, it's something you build. One rule, one trade, and one decision at a time. Part 7 to traders, one market. Why one succeeds and the other fails. Let's stop talking about theory for a moment. Instead, let's watch two traders. They have the same broker, the same account size, the same strategy, the same charts, the same market, yet after 6 months, one trader is consistently profitable, the other has blown 3 accounts. What happened? Let's find out. Meet trader Alex. Alex is excited. He just finished watching several trading videos online. He's convinced he's finally found the strategy that will make him rich. He opens a live account, deposits his savings. His first trade wins $20. He's thrilled. He starts imagining how much he'll make next month. Maybe he'll quit his job. Maybe trading is easier than everyone says. But something dangerous has already happened. His confidence is growing faster than his experience. Meet trader David. David also starts trading the same week. But he has a different goal. He's not trying to become rich this month. He's trying to become consistent this year, before risking real money. He spends weeks practicing on a demo account. He learns how to calculate position size. He studies risk management. He builds a trading journal. He knows profits will come later. His first investment isn't money, it's education. Week 1, Alex wins 3 trades, loses 1. His confidence becomes excitement. He starts increasing his position size. He tells himself, I understand the market now. David also wins and loses, but nothing changes. He risks the same amount on every trade. He writes notes after each position. His goal isn't winning today, it's building good habits. Week 3, the market changes. Alex's strategy enters a losing streak. He loses 4 trades. He's frustrated. He starts questioning everything. Instead of reviewing his mistakes, he blames the strategy. He searches YouTube for another one. Hours later, he completely changes his system. David also experiences losses, but he expected them. His trading journal reminds him, this strategy has losing streaks. He continues following his plan. Nothing changes. Month 2. Alex has now tried 4 different strategies. Every new system looks amazing for a few days. Then reality returns, losses appear. He changes again. His charts become filled with indicators. His confidence disappears. Now every trade feels confusing. David is still using the same strategy. He knows exactly what setups he's looking for. Because repetition creates clarity, every trade teaches him something new. He's not chasing perfection. He's building experience. The breaking point. One morning, Alex loses 3 trades. He's angry. He looks at his account balance. He thinks, I can recover this today. He doubles his lot size. Minutes later, another loss. Now panic begins. He removes his stop loss. Price keeps moving against him. He tells himself, it has to come back. It doesn't. Hours later, most of the account is gone. Alex blames the broker, the market, the news, everything, except his own decisions. David has a losing day too, 3 losses. His daily loss limit is reached. He closes the platform. No revenge trading, no emotional decisions. That evening, he reviews every trade. He discovers one small mistake in his entries. He writes it down. Tomorrow, he'll improve. One trader reacted. The other reflected. 6 months later, Alex has almost given up. He tells people, trading doesn't work. But the truth is, he never gave one strategy enough time. He never controlled his emotions. He never followed consistent risk management. He wasn't defeated by the market. He was defeated by inconsistency. David's account isn't exploding with profits. But something far more important has happened. He's consistent, Some weeks are positive. Some weeks are negative, but his process never changes. He's thinking like a professional, and that's exactly why his results continue improving. The lesson. The difference between Alex and David wasn't intelligence, it wasn't talent, it wasn't luck. It was discipline. One trader chased money. The other chased mastery. One trader wanted quick success. The other accepted slow improvement. One focused on outcomes. The other focused on process, and over time. The process produced the outcome. Which trader are you? Ask yourself honestly. When you lose, do you immediately change your strategy? Do you increase your lot size? Do you blame the market? Do you revenge trade? Or do you review your journal? Do you follow your plan? Do you protect your capital? Do you accept that losses are part of trading? Your answer tells you far more about your future than your current account balance. Final thought. The market gives every trader the same opportunity. But it rewards different behavior. It rewards patience over excitement, discipline over emotion, consistency over shortcuts. The trader who masters these qualities won't become profitable overnight. But month after month, year after year, they'll continue growing while others keep starting over. Because success in trading isn't built on one incredible trade. It's built on thousands of ordinary decisions, made correctly. Part 8. The daily routine of consistently profitable traders. If you asked 100 successful traders what helped them become consistent, you'd probably hear one word over and over again, routine. Not because routines are exciting, but because routines reduce emotional decisions. Think about professional athletes. Before every game, they warm up. Pilots follow a checklist before every flight. Surgeons follow a procedure before every operation. They don't rely on motivation. They rely on preparation. Trading should be no different. If you wake up, open your charts immediately, and start clicking buy and sell, you're allowing emotion to control your day before it even begins. Professional traders prepare first, trade second. The morning mindset. Imagine it's Monday morning. You wake up. Instead of rushing to your charts, you slow down. You remind yourself of one simple truth. I don't need to trade today. I only need to follow my plan. That sentence changes everything, because pressure disappears. You're no longer trying to force profits. You're simply waiting for opportunities. And waiting is one of the highest paid skills in trading. Step 1. Check the economic calendar. Before looking at a chart, know what events could move the market. Major economic announcements can increase volatility. Interest rate decisions, inflation reports, employment data, unexpected news. You don't have to predict these events. You simply need to know when they're scheduled. Preparation reduces surprises. Step 2. Review the higher time frame. Many beginners make one mistake. They immediately zoom into the smallest time frame. Everything looks exciting. Candles move quickly. But they lose sight of the bigger picture. Professional traders often begin with higher time frames. They ask questions like, where is the overall trend? Where are major support and resistance levels? Is the market trending or moving sideways? Only after understanding the bigger picture do they move to their execution time frame. The goal is clarity, not speed. Step 3. Read your trading rules. This might sound unnecessary, but it's powerful. Before every trading session, read your own rules, out loud if necessary. I only take trades that match my strategy. I never move my stop loss. I never revenge trade. I always respect my risk limit. This simple habit reminds your brain that discipline comes first. Step 4. Wait. This is where most traders fail. Waiting feels unproductive. You begin thinking, nothing is happening. I should take something. But professionals understand that markets don't pay people for being busy. They pay people for making quality decisions. Some days, no trade is the correct decision. That's difficult to accept, but it's true. During the trade, now imagine your setup appears. Everything matches your plan. You enter. Now, do nothing. Don't stare at every candle. Don't constantly move your stop loss. Don't close early because you're nervous. Trust the work you already did. Once the trade is open, the analysis is finished. Now discipline takes over. After the trade, whether you win or lose, ask yourself one question. Did I follow my process? Not, did I make money? Because money can be misleading. You can break every rule and still get lucky. You can follow every rule and still lose. Judge yourself by your execution, not by one result. That's how professionals think. The Trading Journal. Every evening, spend a few minutes reviewing your trades. Write down, what went well, what mistakes did I make? What emotion was strongest today? What will I improve tomorrow? These notes become your personal trading coach. Months later, you'll see patterns that were invisible before. You'll discover your strengths, and more importantly, you'll discover your weaknesses. That's where real improvement happens. The weekend review. Most beginners stop thinking about trading when the market closes. Professionals don't. On the weekend, they review the entire week. How many trades followed the plan? How many were emotional? Was risk managed correctly? Were mistakes repeated? Success isn't built during one great trade. It's built during honest reviews. Because every review improves next week's performance. The hidden secret. Here's something most people never realize. Profitable traders don't have perfect weeks. They have disciplined weeks. They still lose trades. They still make occasional mistakes. But they correct those mistakes quickly. They don't allow one bad decision to become 10. That's why consistency grows over time. One final exercise. Tonight, take a notebook. Write down your trading rules. No more than 10. Keep them simple. Read them before every trading session for the next 30 days. It might seem too easy, too simple. But simple habits repeated consistently create extraordinary results. Discipline isn't built through one motivational speech. It's built through repetition, day after day, trade after trade. When people look at profitable traders, they often admire the results. But they rarely see the routine behind those results. The early mornings, the journal, the patience, the preparation, the self-control. Success in trading isn't hidden inside a secret indicator. It's hidden inside ordinary habits, repeated consistently. And that's something every trader can begin building today. Part 9, the recovery plan. How to rebuild after blowing an account. Let me ask you a question. Have you ever looked at your trading account and felt completely defeated? Maybe you lost weeks, or months, or even years of hard-earned money. Maybe you promised yourself, I'm done with trading. Maybe you even believed, I'll never become profitable. If you've ever felt that way, this part is for you. Because almost every successful trader has experienced painful losses. The difference is, they didn't allow those losses to define their future. Instead, they allowed those losses to educate them. Step 1. Accept responsibility. This is the hardest step. But it's also the most important. When traders lose money, many immediately blame something else. The broker, the spread, the news, market manipulation, bad luck. But here's a difficult truth. You cannot change what you refuse to accept. The moment you say, my decisions created these results, you also gain the power to change those decisions. Responsibility isn't about guilt. It's about control. If your habits cause the problem, new habits can solve it. Every loss contains a lesson. Imagine two traders who both lose $1,000. The first trader becomes angry, deletes the trading app, complains that Forex is a scam, never reviews what happened. The second trader asks different questions. Why did I lose? Did I follow my rules? Was my position size too large? Did emotions influence my decision? Both traders lost the same amount, but only one gained experience. Losses become expensive only when you refuse to learn from them. Step 2. Stop trying to recover quickly. This is where most traders make their biggest mistake. They believe they can recover months of losses in 1 week, so they increase their lot size, take more trades, risk more money. But desperation doesn't improve decision-making. It destroys it. Imagine breaking your leg. Would running faster help it heal? Of course not. Recovery requires patience. Trading is exactly the same. Slow recovery is still recovery. Step 3. Return to a demo account. Many traders see demo trading as taking a step backward. It's not. It's rebuilding your foundation. Professional athletes return to basic drills all the time. Not because they're beginners, because fundamentals create consistency. Spend time rebuilding confidence, follow your rules, practice discipline. When good habits become automatic again, only then consider trading with real money. Step 4. Reduce your position size. When you return to live trading, forget about making big profits. Trade smaller than your ego wants. Why? Because smaller risk creates emotional freedom. When the money at risk is manageable, your decisions become calmer, clearer, more rational. Remember, your first goal isn't making money. It's proving that you can follow your system consistently. Profits come after consistency, not before it. The confidence trap. Many traders believe confidence creates success. Actually, discipline creates confidence. Think about it. If you followed your trading plan perfectly for 30 consecutive trades, wouldn't your confidence naturally increase? Of course it would. Confidence isn't built by winning. It's built by trusting yourself, and you only trust yourself when you consistently keep your promises. Your trading identity. Right now, how do you describe yourself? Maybe you think, I'm unlucky. I always lose. I'm emotional. Be careful. Because the stories you repeat become the identity you believe. Instead, start saying, I'm becoming more disciplined. I'm improving every week. I learn from every mistake. These aren't empty motivational phrases. They're reminders that growth is possible. Your identity influences your behavior, and your behavior influences your results. The long game. Imagine two traders. One focuses only on this month's profits. The other focuses on becoming consistently profitable over the next 5 years. Who makes better decisions? Usually, the second trader. Why? Because long-term thinking removes pressure. Not every trade has to be perfect. Not every week has to be profitable. Your career is built over thousands of trades, not 20. A letter to your future self. Imagine yourself 5 years from now. You're calm, disciplined, patient. You've developed habits that once seemed impossible. Now imagine that future version of yourself giving you one piece of advice. It might sound something like this. Stop chasing money. Protect your capital. Trust your process. Accept losses. Be patient. Keep learning. Those simple lessons are often the difference between failure and long-term success. If you've blown an account, you're not finished. If you've made emotional decisions, you're not finished. If you've doubted yourself, you're not finished. Every professional trader has experienced moments of frustration. What matters isn't where you are today. It's whether you're willing to become a better trader tomorrow. The market will always offer another opportunity. The question is, will you be ready when it arrives? Failure doesn't define a trader. Refusing to learn does. Every setback carries a lesson. Every mistake reveals a weakness. Every weakness can become a strength if you're willing to improve. So don't measure yourself by your biggest loss. Measure yourself by your willingness to keep growing. Because the traders who survive are the traders who never stop learning. Part 10, the final mindset shift, becoming the trader you want to be. We spent the last hour talking about charts, risk, discipline, psychology, habits, and the mistakes that quietly destroy trading accounts. But before we finish, I want to leave you with one final lesson. Because this lesson has nothing to do with indicators, nothing to do with strategies, and nothing to do with finding the perfect entry. It's about the person looking back at you in the mirror. Because at the end of every trading day, the greatest competition isn't another trader. It's the person you were yesterday. The market is the greatest teacher. The Forex market is unlike almost anything else. It doesn't care who you are. It doesn't care how much money you have. It doesn't care how long you've been trading. Every single day, the market gives you feedback. Sometimes that feedback comes as profits. Sometimes it comes as losses. But it's always teaching you something. The question isn't, did I win today? The question is, did I learn today? Because traders who keep learning continue improving. Traders who stop learning eventually stop growing. Forget the dream of getting rich quickly. Let's be honest. Most people discover Forex because they want financial freedom. There's nothing wrong with that, but somewhere along the way, many begin chasing speed instead of skill. They want to double an account in a week. They want one trade to change their life. They want shortcuts. The market has a way of humbling that mindset. Real success in trading rarely comes from one spectacular trade. It comes from thousands of ordinary decisions, made with extraordinary discipline. The power of patience. Imagine planting a tree. Would you dig it up every week to check if the roots are growing? Of course not. Growth happens quietly. Trading works the same way. Some improvements are invisible at first. You're becoming more patient, more disciplined, more consistent. You don't always notice those changes immediately, but over months and years, they become impossible to ignore. Trust the process. Your future self. Close your eyes for a moment. Imagine yourself 5 years from now. You're sitting calmly in front of your charts. You're no longer chasing every candle. You're no longer afraid of losses. You know exactly what you're looking for. You follow your plan. You protect your capital. You finish trading for the day. Whether you won or lost, with peace of mind. That version of you isn't lucky. That version of you was built one decision at a time. Every time you respected your stop loss. Every time you waited for a quality setup. Every time you accepted a loss instead of chasing it. Every disciplined decision shaped that future trader. The truth about success. People often ask, what's the secret to becoming profitable? Here's the truth. There isn't one secret. Success is usually boring. Wake up, prepare, analyze, wait, execute, review, sleep, repeat. That's what professionals do, day after day, month after month, year after year. The routine isn't exciting. The results eventually become exciting. One promise. Before you watch another strategy video, before you download another indicator, before you take another trade, make one promise to yourself. Say this, from today forward, I will never risk money without accepting the possibility of losing it. I will never move my stop loss because of fear. I will never increase my position size because of revenge. I will judge myself by discipline, not by today's profit. I will become the kind of trader who follows the plan. Even when emotions tell me not to. If you can keep that promise, you're already ahead of most traders. Your trading journey starts today. Whether you've never placed a trade, or you've blown multiple accounts, today can be a new beginning. Not because the market changed, because you changed. The moment you stop searching for shortcuts, and start building skills, everything begins to improve, slowly, then consistently, then dramatically. A final challenge. For the next 30 days, don't focus on making money. Focus on becoming disciplined. Keep a trading journal. Respect every stop loss. Never revenge trade. Follow your trading plan exactly. At the end of those 30 days, ask yourself one question. Am I becoming the trader I want to be? Because if the answer is yes, the profits will have a much stronger foundation. This documentary changed the way you think about trading. Then it has already done its job. Because profitable trading doesn't begin when you place a trade. It begins when you change the way you think. If you enjoyed this video, make sure to subscribe to Mental Edge Trading. Every week, we'll explore trading psychology, risk management, discipline, and the habits that separate consistently profitable traders from everyone else. If this video helped you, leave a comment below with one lesson you'll apply to your own trading. Not just what you learned, but what you'll actually do differently. Because knowledge without action changes nothing. Thank you for spending this time with me. Remember, the market will test your patience. It will test your confidence. It will test your discipline. But if you continue learning, continue improving, and continue protecting your capital, you'll give yourself the opportunity to become the trader you've always wanted to be. Until next time, stay patient, stay disciplined, protect your capital, and never stop learning. I'll see you in the next video.